Hey everyone, in this video I'm going to do another installment of my Q&A with Wall Street series. I haven't done one of these videos in a while, but I decided to do this one because I found this Q&A session to be interesting and I thought my viewers would enjoy this. So this is a Q&A with ARM Holdings, and it's question and answer session that the company management held with Wall Street analysts. So let's dig into these details. Let's see what came out of these question and answer sessions. And then I'll highlight what I think these questions and answers mean for ARM holding stock investors. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now. All right, so the first question we're going to dig into is from JP Morgan analyst Harlan Sur, and he asks about the licensing momentum continuing into fiscal year 2025. Of course, the current fiscal year has been phenomenal for ARM Holdings. It's into its 2024 fiscal year, and investors want to know, is this going to continue? How much momentum do you see and how much visibility do you have into fiscal year 2025? So interestingly, the company's CEO, Rene Haas, jumps in and says, what we are anecdotally seeing relative when we engage to customers is that the need for more compute, the need to be able to handle what I would call a bit of the unknown relative to these large language models that either run on an edge device or in a hybrid way, is fundamentally driving a need for more compute than they had before. So speaking more generically, what the CEO is saying is these companies that are making these edge devices, things like tablets and mobile phones and laptop computers, are seeing that they need more computing power in these devices than they thought. They already thought they were going to need more to enable these devices with AI, but now they're seeing that they need even more than they thought. And longer term, that's good news for ARM Holdings, because the more computing power that's needed, the more technology that's going to be included in these devices. And that's good news for ARM Holdings. That's where it can generate licensing revenue and royalty revenue, because many of those components in there are ARM Holdings components. So that's good news for the company longer term, even though the CEO is not giving any specific answer as to 2025 specifically. The CEO did give investors somewhat of the information they were looking for, in that highlighting that longer term, there's going to be needing more computing power in devices, in these edge devices, and that's going to be good news for ARM Holdings. So it's not this one-time thing where there's going to be products that are going to have increased technology and then that's it. No, it's going to be a continuously increasing need for computing power in these edge devices. Because of the rising effectiveness of artificial intelligence, consumers are going to demand that. They're going to want that. They're going to be willing to pay that incrementally extra cost to have their devices infused with AI, right? You're thinking about your smartphone, right? Wouldn't you pay an extra $50 for your smartphone if it's going to come with much better AI technology, a much better AI assistant, a much better voice recognition system, and on, right? So as a consumer, you would likely be willing to pay that incremental cost to have that AI technology. And that's what these consumer electronic companies, these edge device companies, are noticing right now. The CFO jumps in to say, I think we're going to need to work through this quarter to find out how much of that upside continues to, and that trend flows into next year. Because we've seen this demand has been coming, I think, in a little shorter cycles than we have seen with typically before. So I would say stay tuned. In 90 days, we'll give you a better answer. Interesting. So the CEO just giving a generic answer saying longer term, we do see higher demand from these devices. The CFO coming in and taking a more specific view and saying, look, before we were able to see further into the future in terms of what demand is going to look like. With this current cycle, we can't see that far into the future. We don't know what it's going to be like next quarter, next year. So what the CFO is telling the analyst is, why don't we wait and see? Let's wait one more quarter. Let's see how this demand environment shakes out. Let's see what kind of orders we get. Let's see what kind of customer phone calls we get, what kind of customer interest we get. And then we can tell you a little bit better about what's looking like 2025 and what the year is looking like for that fiscal year, for the next fiscal year, because we couldn't give you a better answer right now. That's what the CFO was saying. Right now, we just don't know. For now, what we've seen from ARM Holdings is that what revenue and what sales they thought they were going to achieve for their current fiscal year and their current quarter, it was much better than they thought. So they thought they were going to deliver a certain amount of revenue. Turns out it was much better than that. The fourth quarter, the quarter that's upcoming, the guidance they gave, turns out it's going to be much better than they initially thought. So they keep having to revise their forecasts upward. So if there's uncertainty, the uncertainty is working better on the upside. So it's becoming better than they thought. So investors looking at this situation and seeing this answer from ARM Holdings, I think the CFO is being cautious, because I say this a lot in my comment section when people ask about conservative guidance versus aggressive guidance, and what's better. Should a company give a conservative forecast or should they give an optimistic forecast? And the point I always make is neither. Companies shouldn't try to be conservative in their guidance, nor should they try to be optimistic and ambitious in their guidance. What they should aim to do is to be accurate in their guidance. Accuracy is what investors like myself look for. I don't want to judge how conservative you're being as a CFO in terms of giving your guidance. I don't want to judge, if you say 10%, then that means 12%. Or if you say 12%, that means 14% or 15%, right? I don't want to make those adjustments always upwards or downwards because you're too conservative or too optimistic. I want you to give me a number that's the accurate number that you think you're going to deliver. And I think that's what this CFO is doing here. Saying, I don't want to give you a number, even a conservative number, because I'm trying to be accurate. So instead of doing that, why don't we wait 90 days? Let me get more information. Let me have more discussions with our clients, and let me get better information so that I can give you better information. Because if I was to tell you something right now, it's not going to be accurate, and I'm going to have to give you a really wide range in terms of what we're looking at. So instead of giving you that number, why don't we just wait 90 days, and then I'll come back to you and I'll give you a better answer, and you can inform your investors about what we said and what we think we're going to see going forward. I'd prefer that approach than giving a conservative number and then coming back next quarter and having to revise that number upward. I don't like when companies habitually give you conservative or optimistic guidance. So I like this response here from the CFO. And from what it seems, ARM Holdings, it looks like customer demand is strong to very strong, and it keeps getting better. So I would say if you're looking at this and you're looking forward, it's looking like the business is going to do really, really well. Now, that being said, the stock is already really expensive. So it's already pricing in those excellent prospects. Investors are expecting those excellent guidance, those excellent sales numbers to come through. So if you don't see something excellent, then that's going to be alarming, because that's already baked into the forecast. Investors are already looking forward to excellent news from ARM Holdings because their demand has been so strong and they keep getting better. So if there was a reversal of that, that could be a big, big headwind for ARM Holdings. So that's something to keep an eye out for. And I will certainly be updating you on the latest developments from ARM Holdings. Before I let you go, let me tell you about the greatest deal on YouTube. With just a click of a button, you can get free financial analysis from a professor with decades of investing experience. So what are you waiting for? Hit that subscribe button, and I'll see you again soon.